Hi, I'm Frank Holsteen, Managing Director of Wespath's Investment Management Team. Today I'm happy to be with you to recap the investment highlights from the third quarter of 2025. This quarter, Wall Street seemed a bit disconnected from Main Street. For instance, the job market has become increasingly challenging if you are looking for work. Yet the S&P 500 index of leading U.S. stocks was up 8.1% for the quarter ended September 30th. And it has risen 14.8% since January 1st. Non-U.S. stocks have done even better in 2025. They climbed 6.9% in the third quarter and are up 26% this year, as measured by the MSCI ACWI ex-US IMI index. Sticking with the numbers, the U.S. bond market, as represented by the Bloomberg U.S. Aggregate Index, finished the third quarter up 2%. It has risen 6.1% for the year. Just a reminder, bond prices rise when yields decline. Diving a little deeper into the numbers, the U.S. stock market returns were driven partially by the U.S. Federal Reserve's decision to cut interest rates by a quarter percentage point in September. They were also driven by the artificial intelligence spending theme. For example, the stocks of companies providing AI hardware and software were up significantly. In the third quarter, chip maker NVIDIA rose 18%. Apple leapt up 24%. Google's parent company Alphabet climbed 38%, and Tesla raced up almost 40%. This illustrated a trend we've seen over the past several years. The hardware and software companies aren't the only ones expected to benefit from the rise of AI. Other businesses that take advantage of AI will become more profitable because they don't need so many employees. However, this comes with a trade-off. We're seeing data that show recent college graduates are having a hard time finding a job. One reason for that is some companies are replacing certain entry-level jobs with AI. In the second quarter, the unemployment rate for college graduates between the ages of 22 and 27 averaged 5.3%, the Federal Reserve Bank of New York announced back in August. The unemployment rate was around 4% for the labor force as a whole in the second quarter. Excluding the quarters immediately following the start of the COVID pandemic, it was one of the toughest job markets for recent graduates since 2015. And it's not just recent college graduates who are having a hard time finding a new job. The most recent jobs report showed U.S. employers added just 22,000 jobs in August. In fact, the total number of U.S. jobs has changed little since April. Said another way, the job market is relatively stable if you have a job. However, it's much more challenging if you are searching for a new one. Due to the government shutdown, we didn't receive the scheduled September jobs report on Friday from the Bureau of Labor Statistics. The BLS also tracks inflation, and the most recent numbers show inflation remains somewhat elevated. The Consumer Price Index rose 2.9% in August from a year earlier. As a reminder, CPI tracks the change in prices over time on everyday items, such as clothing and food, typically bought by consumers. The CPI reading has been inching higher for several months now, moving further away from the Federal Reserve's target of 2%. When you remove the cost of food and energy from the CPI, the rate of inflation was 3.1% over the prior 12 months. The price of food and energy can be more volatile, so by removing them from the equation, it gives a sense of broader inflation trends. As always, Wespath will continue to monitor the latest investments, jobs, and inflation news, and update you on the most important market developments. We're here to keep you informed throughout 2025 and beyond to help you achieve your long-term investment goals.